Welcome to the NWR Investment Resources virtual series, or the virtual whatever. It's virtual anyway, Julian. Good to see you. Welcome back. We're going to talk silica sands with Perpetual Resources, and the ASX code for Perpetual is PEC. Now, they've got a silicon sands project over in WA, in the Midwest leading high-grade silica sands project. That's a big call there, Julian. Joining me today is Julian Barbarczy. He is the Executive Chairman to tell us all the latest news, and look forward to hearing from you. Thanks, Julian.
Thanks a lot, Kerry, and thanks to NWR for putting on the conference. Yeah. It's good to be here virtually anyway. Look forward to when we can all get back in person again.
One day, yeah. Julian, one day.
But as Kerry said, this is about our Beharra project, which is over in Western Australia, and we're focused on a silica sand project, which is a commodity that not many people probably appreciate is a structurally undersupplied commodity with really good pricing dynamics. So hopefully over the next 20 minutes, I can give you a little bit of information about why the commodity is interesting and we're one of the particularly interesting companies in the sector. So here's a disclaimer for you to read at your leisure. So as Kerry said, we've got the Beharra project in Western Australia. We own 100% of that. It's a very strong commodity market, and hopefully I can give you some indications of that over the next little while. We've done a study, a PFS study, which was very robust, and I'll give you a lot more information on that as well. And importantly, the positioning of this project relative to infrastructure makes it something that has a lot of economic potential, notwithstanding the fact that you need to prove you've got the metallurgical characteristics of a good silica sand ore body, but we've also got a great location. So hopefully I can shed some light on some of those aspects of the project. So we've been a company that's been around for some time, but myself and Managing Director Robert Benucci got involved about 3 years ago. So we started the company. It was an old gold explorer, which we took over, recapitalised, refreshed the board, and repositioned the company into a commodity that we thought more suited our style, and also was a company that we could build into something that could endure for some time. So we did a lot of work around focusing on which commodity we wanted. We were very keen on industrial minerals. What we were looking for was not, a nice tenement that we could put some holes down and hopefully find a high-grade gold discovery or a high-grade base metals discovery, because while that's good, generally the probability of success on those is relatively low. We wanted to do something that we thought could have a little bit more certainty to it. And so we're looking for a project in industrial minerals that had potentially low capital, good operating margins, and quite a long life. So we settled on silica sand because we thought it had really strong commodity attributes. And then thankfully we found the Beharra deposit, which we acquired off some vendors a few years back. So yeah, we've had a pretty good run over the last 12 months, very strong support from core shareholders, about $3 million in cash at the moment, but importantly, we're quite frugal in the way we run the company. And so we don't need a lot of cash to generate good returns at the company. So I'll give you a bit more information about what we've got coming up. But just standing back, our project portfolio is all around the Geraldton region, or to the south of Geraldton. The main project is Beharra, and that's the one where we've done all the work, and that's the one in the middle of that map there. Around there, we've got 3 other project areas. One is called Sargon to the north, Arrowsmith West, which is basically to the west of us, and Eneabba North and South, which is to the south of Beharra. We've done limited activity on those because really we've been so focused on Beharra, which we think is the jewel in our crown.
Sorry to interrupt you there, Julian. Why did Beharra become the standout in terms, because you've got the other assets there? What made you focus on just that one?
Well, the Beharra project has got much better metallurgical attributes than the others, meaning that we've got a much cleaner sand, much lower in impurities, and we think closer to the port, given the trade-off between impurities and close to port. So the Sargon project is more a construction sand play, so you don't get as much for that sand when you export it, whereas right. Beharra's got a much better pricing dynamic and is arguably, or not arguably, it's definitely the best quality sand in our portfolio at the moment. So we focused on that because it's the best project.
Thanks.
But sand's one of those interesting commodities that I don't think most people appreciate it. I think most people's extent of their experience with sand is that it gets on their feet on the way back from the beach and is a nuisance when they get home. But most people don't realise, though, that it's a huge global commodity. So it's about 50 billion tonnes of sand and aggregates mined every year for all sorts of purposes that go into construction, into glass, into building materials. But it's quite a ubiquitous commodity. And it's been mined at such a prolific rate in the last few decades, particularly in places like China, that, like a lot of commodities in the world, it's getting into short supply. And so, you know, sand use has tripled over the last 2 decades. There's a huge demand for it. And some of the supply sources in Southeast Asia, which is where we're looking to export our sand to, have been restricted because a lot of the mining methods for the traditional sand mines have left big environmental devastation. And so the buyers in the main markets in Asia are looking for diversified supply sources. And somewhere like the west coast of Australia, where good mining practices are used, is you know, the perfect attribute for those buyers to get on board. But again, what's it used for? It's used for all sorts of things. You probably don't appreciate the extent of the use of sand. It's in, as I said, lots of building material products. It's in container packaging. It's in high-tech architectural glass. And so it really is a ubiquitous commodity. There's some interesting attributes to sand all around the world. You know, there's no shortage of sand in some regions like the Middle East, but believe it or not, they are some of the biggest importers of sand because desert sand is too rounded. So the grains have been brushed by winds over many, many years, and they're too round to be useful in most applications. So, you know, useful sand is actually harder to find than most people believe. We've done some independent work, which we commissioned in the region. We think there's about 40 million tonnes of extra high quality sand needed in the Asian region over the next 5 or 6 years, and about a $3 billion market opportunity for that. And that's happening at a time, as I said, when there's a bit of a restriction of supply. So some of the key supply sources are actually being restricted because of the environmental damage. They're unlikely to come back on simply because the environmental damage won't be reversed anytime soon. And so, as I said, buyers are looking at places like Australia, which previously wasn't an economic place to source sand from. But in the last few years, the pricing has been so robust that it's become a viable export commodity market for Australia. Looking at the relative size of the markets. So there's a pie chart there on the right. We're focused on the glass industry. So just keep that in your mind. There's lots of other applications though. Foundry sand is a big one. And that's where they use the sand for the molds that are used to make very large steel structures. And there's a bunch of other things like hydraulic fracturing and others. But we're very much focused on the glass industry. And to put that into perspective, that's the biggest industry in Asia outside of construction sand for the silica sand market. So not only is it the biggest market, it's also the fastest growing market. So we think we're in a really strong position to service that market as we continue to develop Beharra. Silica sands are quite a misunderstood commodity. In many respects, it's like other misunderstood commodities of about 10 years ago. So something like lithium or spodumene, which people are very up to speed on now. But it's something which is very much negotiated between buyer and seller. There's no index, there's no Bloomberg screen where you can bring up the silica sand pricing. So as a result, it's quite misunderstood. But in trying to demystify it, essentially it's in some ways like iron ore. You need a minimum quantity of silicon dioxide, or SiO2. You need at least 99.5% SiO2 to service the glass markets. And then the pricing from that point is dictated by your impurity profile. So the key impurity profile here, and we've shown that on the right-hand side, is Fe2O3 or iron oxide. And that's a key impurity because the more Fe2O3 there is in the product, the more staining there is, and the less clear the glass is. And so they need very low iron products for very high quality glass, and that's the top of that right-hand chart. And as you cascade down there with higher Fe2O3, you have then lower higher impurity applications with lower pricing. And so it's not that hard to get your head around the pricing once you understand the way the market looks at it. Again, focusing on Beharra, and that's what the rest of the project will look at, or the rest of the presentation will look at. It's about 100 kilometres south of Geraldton Port. We've drilled probably the bottom 40% of the deposit. We've got almost 140 million tonnes of resource, grading about 98.6% silica in the ground. Once we beneficiate that up through a simple process that I'll show shortly, we've got about just under a 50 million tonne reserve, and that's at 99.6% silica and relatively low iron as well. So there's a lot more exploration potential on the tenement that we haven't gotten to yet. And we've proven so far that it cleans up really nicely. And that's one of the key things. It's not necessarily the grade of the deposit in the ground, it's how you can clean it up in a very simple process and what you can do for customers with their end product requirements. We've done a PFS, as I mentioned. We delivered that around April this year, and that was a really compelling study. Importantly, that looked at mining and processing the ore body using all the sand in the ore body as it came at us. So no selective mining of the higher grade parts of the ore body. and that generated a really robust case of about a 230 million NPV. A 1.5 million tonne plant delivers that. We're starting with a plant of about 500,000 tonnes per annum, ramping up to about 1.5 million tonnes per annum. So in the context of a almost 70 million tonne market in the Asian region for high quality glass, we're not going to be anything like a drop in the ocean for that. To deliver those returns, we need about $39 million of capital. Most of that is in the processing plant, about $90 million. The rest is generally in infrastructure. So we're looking to seal one of the haul roads that we'll need to use, which will allow us to run 100-tonne trucks all the way up to the port. In terms of OPEX per tonne of processed, it's about 43 Aussie onto the boat. And we, based on our market inquiries, we think we can sell the product for about $50 FOB. So really robust margins, should generate anywhere between $30 and $40 million in cash flow every year. And as I said, that was our first pass at the project. And now we're looking to optimize the project to enhance returns. So looking at what makes Beharra special, and as we spoke about earlier, Kerry, there's a number of projects in the region. We seem to have the standout project on many fronts. One of the key aspects is the white sand to yellow sand ratio. We've got 90% white sands to 10% yellow sands. And inherently, that just means we've got to do less work to clean the sand up before it's ready for shipment to customers.
So Julian, sorry to interrupt you, what makes it yellow versus white? Is that an impurity? Is that, and how difficult is it to get the yellow up to that sort of higher premium quality?
Yeah, no, that's a good question. So the yellow sand has more staining in it because it's got a lot more iron and other impurities in it. They can either be on the outside of the sand grain, in which case it's easier to liberate, but most of the time with yellow sand, it's an inclusion. So you need acid or calcining to liberate all those impurities, which basically renders that uneconomic for anything other than construction sand. So with white sand, it's quite the opposite. Often you've got some staining, but it tends to be on the outside of the grain, and it's amenable to a very simple flow sheet like we've got to clean it up. So that's the main difference. Really starting from a pure source inherently means it's cheaper and easier to clean it up. But then the orientation of our ore body is in that middle section there. We've got a really thick white sequence, which sits above the water table, which is anywhere from 10 to 12 meters below surface. And the white sequence is overlain by the yellow sequence, which is anywhere from 0 depth up to about 3.5 to 4 meters in depth. And so we've got a project which is very amenable to selective mining. And that's what we're doing with our future studies that I'll talk about in a few slides, where we're actually trying to optimize the project. And it looks like being quite successful, where we'll get an even better product at even better margins just by focusing on the white sand project. And then just to compare it to a nearby project, again, the geology of sand can be quite different over quite short spaces. So there's another project near us, and that's got an impurity profile of probably twice as high as what ours, or we're 50% lower than theirs. And so even over such short distances, there can be quite big variability in the metallurgical attributes of a project. So we think we're quite lucky with Beharra, and now we're obviously moving that through the study regime. As I said before, it's a very simple flow sheet. This is similar to a mineral sands flow sheet. The difference for investors to understand is, though, that the mineral sands are looking for the heavies and we're looking for the lights. So we're almost taking the rejects of what the mineral sands guys will be putting out to the rejects is what we're focused on, and we're rejecting what they're focused on. But again, a simple flow sheet, magnetic and gravity separation only. That's an idea of a plant, what it looks like in the bottom left-hand corner. They're very common plants. They're tweaked for the metallurgy of the deposit, but there's nothing tricky in terms of new technologies or reagent use or anything like that. It's a very straightforward product. So as I said, we've done the PFS based on mining both the white and the yellow sand, but then what we're looking at now is optimizing it just to look at the white. So we went and did some test work on the white. We took a bulk sample from an area of the ore body which approximated the standard head grade, put that through the lab, and we got a really big reduction in Fe2O3. And if you remember from a few slides earlier, as you get closer to 100 parts per million iron, you get a much more higher value product. So we've managed to get our iron down from just under 300 parts per million to about 120 parts per million. And our Al2O3, again, that's halved from just under 2,000 to just under 1,000. That's put us in good stead. We've had a lot of interest from buyers around this potential product. And so what we've gone back to do is drill out the bottom part of the ore body. You can see in the bottom part of the tenement here, we've drilled those red 86 holes recently. and that'll basically represent the first 10 years of mine life under a white sand only processing scenario. So we're expecting those results imminently. We're hoping to get them by the end of October. We've got the processing finished, but the assays are delayed by about a week, and we hope to get them in the next week or so. So, we're on the cusp of finally announcing a representative bulk metallurgical sample of our white sand only product, which, as I said before, is gaining a lot of interest from potential buyers.
Julian, how much drilling do you actually have to do? Because it might be a dumb question, but sand to me seems like, do you have to drill it if the sand's there? It's there. Isn't it just dig it up and put it through the processing plant?
No, if only it was that easy. There's a thing called the JORC code, which means you can't just dig it up and put it through, or you could do that, but you wouldn't be able to announce a reserve and a resource. So being a listed company, it's important for us to demonstrate the veracity of our project. So we've had to drill our ore body initially on quite wide spacing, multiple 100 meters, and we've now got that down to about 100 by 100 spacing in the middle part of the bottom. So it's relatively wide spacing. Its ore goes down to about 12 to 15 meters, so it's not extensive drilling, but it's still, you've got to do the work, and you need to get all the assays back and do it in a really rigorous way. So despite the fact that it's sand, you've got to prove that the continuity is there.
Okay, yeah.
And there can be variability in ore bodies, even sand ore bodies over, hundreds of meters. So, you have to go through the rigorous process. As I said, we've shipped some of our product up to some buyers up in the Asian region. They've done testing. Some of them have actually been able to get the iron content even lower than what we have. And so we're in discussions with one around potential DSO sales of sand. And so that's because this sand cleans up so readily, because the iron and the impurities are on the outside, not the inside of the grains. And so we've kicked off a DSO scoping study. We'll finish that this quarter, and we hope to then sit down with our potential partner up in Asia and look at a scenario where we might ship DSO sand up to them, process it in their country, upgrade it to a much higher value product, and then share in the economic spoils of that. And so that's a project that's progressing, and we should have some news on that before Christmas. In terms of infrastructure, this project, as I said, metallurgically, it really stands up, but one of the key attributes of this project is also its location relative to infrastructure. It's no good having a great ore body if you're not near a deep water port. That's because you need to be able to access ship sizes of about 50,000 tonnes per ship, and that gets your freight rates lower. Now, freight rates globally right now are very significant, but in a normal market, we think we'll be shipping this to Asia for $15 to $20 a tonne. Currently, those freight rates are more like $45 to $50 a tonne. But if you weren't in a 50,000 tonne ship, then you'd be paying normally about $50 a tonne as well. So that would obviously crimp a lot of your economics. So luckily, at the end of the sealed road from our ore body, we've got the Geraldton port, which is capable of taking those 50,000 tonne ships. So as I said, we've got a sealed road all the way from Geraldton port down to our project. There's a small section of access road called Mount Adams Road, about 9 kilometres. We'll be sealing that as part of our project, and that can carry these PBS super triple trucks, which are about 100-tonne trucks. And so, again, if this project was another 100 k's inland or wasn't on sealed roads, then it probably may not be economic. And so, again, we're just fortuitous that it's located where it is. In terms of progressing the project, we've got really strong relationships with traditional owner groups. You may have seen last week we announced that we'd accessed water through a really innovative agreement with the Yamachi Southern Corporation. That meant that we've managed to acquire their ground surface rights for the water, which basically underpins the water needs for our project. And that's a significant announcement for us because finding water in this region isn't as easy as what most people think. And so again, it just goes to show how strong we've been in our community relations. We're doing very rigorous environmental studies as well, which I can talk about in a couple of slides. And really the mining tenure is secure as well. We've already got our mining license granted. So we're in good stead, both locally and with the government as we progress the project. In terms of offtakes, we've got some MOUs for offtakes. Most of these buyers at the moment are out of China, but there's also significant buyers in Japan and Korea. We've so far got about 1.25 million tonnes of offtake signed up. They're MOUs that need to be tightened up a lot. But on the back of the good white sand results we expect to announce in the coming weeks, we'll then be going into quite an intensive period of formalising some more of these offtakes with a number of buyers. So we hope to have more news to the market in coming quarters around that. And that's probably one of the key risks and opportunities for our company is getting to the point where we're confident enough to talk about both pricing and volume which will underpin the economic case. So we're in good stead. There's overwhelming demand for the product based on the interest we're receiving. So we're feeling like we're in a very good bargaining position with regard to that.
Okay.
Development.
Almost time's up.
Okay, development timeline is basically looking to be in production by around middle of 23 to the third quarter of 23. We'll have a white sand network out in the coming weeks, which should be a really big catalyst for us. That'll lead into the offtake discussions as discussed. The environmental approval process is quite rigorous in this area. So we've assumed the worst case scenario. So there's an opportunity to bring that in. But again, for modelling, we expect that to be middle of 23 when we get the approvals. We've got a DSO scoping study out in this quarter and a PFS update for the white sand only scenario due by the end of the first quarter. We'll move straight into a definitive feasibility study, which will take 6 to 9 months, and then a decision to fund at the start of 2023. So, we're barreling forward with the project and haven't found any red flags yet, and it's progressing really well. So in conclusion, we've got what we think is the Midwest region's preeminent project. We've got the best metallurgy, ideal location with infrastructure, a really robust economic model, and we think a really good team of people work for the company to progress that. So that's the formal part of the presentation, Kerry, and happy to take any questions.
Thanks, Julian. If you've got questions, pop them down in that Q&A box and I will make sure I put them to Julian, Executive Chairman. I've got one from Dev here. It's what is the main target segment? What is the price in the segment? And what is the main geographic region for the market?
Without a doubt, our geographic region is the Asian region. So that will ideally be a mix of China, Japan, and Korea. They're the largest buyers in the area. Our focus is on high quality glass. In terms of the pricing for that, and that's the low iron one at the top of this chart. So we're looking for cover glass and other areas. So we need to get our iron as low as possible. We think we've proven we can get our iron into the low 100s, and the pricing for that, we're not yet confirming that to the market. Our PFS was based on an iron of higher than that, and we think we can sell that for US $50 a tonne FOB. And so our response at the moment is we expect a materially higher price. But as we move through the studies, we'll be able to provide more indications for that. But our idea is that we've put out a base case PFS, which is the white and yellow sand combined, and any future study should be superior to that in economics because we'll get a higher revenue per tonne.
Julian, earlier in your presentation, you made mention of the transport costs. We all know that there's a supply chain disruption and the cost of shipping is going up. Now, is that going to have a material impact on the economics of this project?
If we were in production now, I think it would be honest to say that our margins would be much less significant than what they would be because shipping rates have gone through the roof. No one that we speak to expects that to stay around for more than a year or so. That's because there's been a real shortage of ship manufacturing and some idiosyncratic things related to COVID and supply chain. So we expect the shipping rates to be transitory. They typically, over a 20 to 30 year period, average $15 to $20 a tonne, sometimes lower. They're at the moment multiples of that. And so we expect them to normalise. So the long answer is that if we're in production now, it wouldn't have an impact, but we expect that to be relatively benign or no impact by the time we're in production in 2023.
Ben is asking, can you shed any light on the difference in pricing for the higher grade sand?
Yeah, look, there is a big break in pricing between, say, 300 to 500 ppm product and 100 ppm product and below. That's the iron I'm talking about. We believe we can sell the almost 300 parts per million iron product for around $50 US. And there's reports in the market that the pricing for below 100 ppm is north of 100. But we're being more conservative and just saying that we expect to get more. And until we've had more detailed discussions with off-takers, we're not prepared to put a price out for our lower iron sand. But obviously that will be revealed as soon as we're confident to do that in the coming quarters.
We're running out of time. So last question here, Julian. Can you talk of the silicosis risk? How do you plan to manage that?
Yeah, silicosis is an issue for very, very fine silica particles. So if you're doing grinding of silica, that can become an issue. At the grain size that we're talking about, silicosis is a very, very small risk. But there'll be things like dust suppression and other things we'll have to implement at the mine site to ensure that those very rare risks are managed. But I think you need to differentiate between people who are grinding silica down into dust, and that's when the risk of silicosis is much higher, versus us who are really digging up and separating through non-mechanical means, so where the risk is much, much lower.
Yeah, yours more the raw product. When you get into the sort of construction of the granite tops, that's when they're grinding it quite finely.
Correct. So I think the risk of our project is as much risk as if you were to go to the beach every weekend, which most people are happy to run.
What a wonderful way to end the presentation. Julian, I wish you all the best with the project. Great economics. Good to see it's close to the port and easy to truck it up to Geraldton. Thanks for joining us at the NWR Resources Series today.
Thanks a lot, Kerry.